Hey traders, hopefully you're having a good one. In this video, we'll be taking a look at a bunch of different charts. We'll be first taking a look at Bitcoin, we'll take a look at some S&P, we'll also take a look at some other indices that we don't normally look at, Dow Jones, NASDAQ, stuff like that. We'll take a look at the Forex market a little bit, looking at the DXY, which is a very common chart that we look at, but we also do want to look at kind of a basically risk on, risk off indicator that I find pretty useful. And what it is basically showing is the comparison of the different major currencies compared to the Japanese yen. And we can see JPY is the end of each pair. It's just how the Forex market is set up. I don't exactly know why, but if you just compare them all together with a base of the the Japanese yen, you'll be able to get a good comparison. And things like the US dollar are very risk off. Euro, I would say, is a little bit more risk off, but the currencies that are pretty risk on would be things like the Canadian dollar, Australian dollar, and the New Zealand dollar. Even GBP is definitely considered risk on at this point, where a long time ago it was definitely considered risk off. But that's a really good overall indication of the sentiment in the market, in my personal opinion. So we'll be taking a look at that, and then we'll end off the video taking a look at some altcoins in the market. Some have done pretty well. Doge had a pretty good move to the upside. We see things like Sushi Swap also pushed to the upside here on the daily candle. So it does look like there is some demand coming into the altcoins. So without further ado, let's start it off here. We're going to take a look at BTC first, take a look at some tools, some other data sets that are related to the cryptocurrency market but aren't exactly Bitcoin. So we're not going to take a look at the super long time frame or anything, but just zooming out a little bit on the 12-hour, this is the long-term contraction that we've been talking about. We're really pressing up right against this 30K level. We do have a minor level of support, which is now currently at a level of resistance in a confluence zone at around 32.5, and we can see back all the way from around mid-May, we've been holding this support time and time again. At this point, if it does fail, we basically invalidated the Wyckoff accumulation phase that we've been talking about for a couple of weeks here, maybe even a month at this point. But overall, it does look like it is still holding. The 30K zone is the last level. If it does break this zone and does break the level of around 30K, the Wyckoff reaccumulation phase is broken, but we can still hold this descending wedge formation that we currently see right here. And let's just quickly draw the first major zone right here. So this is the first massive phase right here, and then you see the second wave right here, and now this is the third wave. So we could be dipping a little bit below 30K. This descending zone is still holding, but ideally it would be really nice to see this price hold this 30K zone. So we are given a series of higher lows, low, higher low, higher low, and then you're going to get that nice squeeze where it's going to be breaking that descending zone and finally breaking to the upside. But at this point, we are still, I'm not super confident, to be completely honest, that it's going to be breaking straight from this key level of support right here. We do have this splitter of this wedge kind of forming a small level of confluence at that 30K zone, but at this point I'm just waiting to see if it's actually going to be breaking, because Bitcoin is going to be basically opening the door for other altcoins to be moving to the upside. If Bitcoin falls, there's not going to be altcoin massive rallies in the market. It just really doesn't happen. You need to see Bitcoin at least consolidate and hold the support. Ideally, you want to see it continuing to push to the upside, chugging along, and then the speculation comes into the market. So we're not really going to harp on it too much. We don't really see a tremendous amount of buy pressure coming in when we are at this 30K zone. We could see a little bit of a dip, but at this point right now, we're just squeezing between this key descending zone right here, as well as this horizontal level of support that we've been talking about basically for a lot of this year. And then if we go on to the Bitcoin dominance, we do see a pretty tight contraction occurring. If we actually zoom in here a little bit, key level of resistance around 47%, meaning Bitcoin is taking 47% of the total cryptocurrency market cap. You see a series of higher lows connected by an ascending trend line, creating an ascending wedge. This is a great structure for potential continuation to the downside, and that's what we're looking for. Yes, we do want to see Bitcoin continuing to push up. It is the blue chip of the crypto world, kind of, so to speak. But when we do have massive rallies in Bitcoin, there's going to be more speculation that altcoins are going to be rallying at a greater rate because it takes less capital to move them up compared to BTC. So there's more money to be made if you are correct. So overall, we do anticipate this pushing to the downside, and that's what we're looking for, is a continuation of push to the downside. And in my opinion, we're tightly squeezing right here and is looking really nice for a potential move to that downside. And we see this is a lower high than that one, but this is still a high. And then we see a lower high. If we see a lower high form right here, we could see a nice descending zone, ascending zone squeeze, and then that could form into a nice structure where we're going to get that expansion and volatility to the downside, which is really what we're looking for. So not much more to talk about within that chart there. Moving on to the next thing, we're going to talk a little bit about the Bitcoin COT. This is the commitment of traders. This is the 4 largest shorts and 4 largest longs. Looking at this chart right here, or this data set that we can see below the chart of Bitcoin. And there's going to be 2 main things that we're going to be looking for. The first main thing is how much selling is occurring within the market. As we can see, if we do zoom out, there has been points where we've seen significant selling coming in from the bears for the whales in the BTC market. At this point right now, we've seen a major decrease in the overall selling compared to what we've seen in the past. We've never really seen this little amount of selling since really ever the commitment of traders has been coming out for the Chicago Mercantile Exchange that BTC futures is trading on. So great to see in terms of the reduction in supply for the market, talking about the whales. And we also see that from our slight low right here, we are seeing an increase in the whale activity for buying, which is great to see. And ideally, in a perfect world, we would see the delta come down and a reduction in distance from the selling to the buying, which would just basically be the delta. We want to see small delta, which is indicating, if you do have small delta, that there is decreased selling, increased buying in the institutional level. And that's really what we're looking for within the commitment of traders, and that is potentially what we're going to be seeing right here. We didn't see that much of a reduction in selling within the last week, but hopefully next week it would be great to see a push up from the demand and a pull back down from the supply, and then we'll see another tight squeeze in the delta, and that's going to be an indication that it's a great opportunity to look for buys, longs, and BTC, as well as the altcoin market, because we're already midway through our bull run, is our current thesis and speculation. So that is going to be the overall view that we have within the commitment of traders data. And then we're going to touch on this chart right here, which is the hash rate of Bitcoin. There's been quite a discussion going over the exodus of miners in China, which definitely makes sense. We view it as a positive thing because it is creating more decentralization within the BTC network, which is fantastic. There are miners leaving China and going to different places around the world that have cheap energy, so then they can continue mining even if there's a little bit of miner capitulation or miner squeeze. But overall, it does look like it is holding in terms of the hash rate. I don't really view this as a negative thing in terms of the hash rate going down because it's not a minor capitulation. If it was a minor capitulation, it would be a negative thing, but this is just miners having to sell BTC in order to pay for their cost to move, basically, to relocate. But it does look like we are holding in terms of the hash rate. There was one other province in China that did ban mining for Bitcoin. I forget the name, but there was a couple major jurisdictions initially that banned BTC mining, and then there's also another one that added on very recently, but it doesn't look like it affected the market nearly as much as the initial move down for the hash rate when that first key news article came up for China. So the last thing we're going to be talking about is the comparison between BTC and ETH, Bitcoin and Ethereum. And this is kind of similar to the gold-silver ratio that we look at within the commodities market. And how we view this is when we see big pushes to the downside. Also, this does look quite similar to the Bitcoin dominance chart, which kind of does make sense because it is a large percentage of the altcoin market is going to be Ethereum. So it kind of makes sense if you're comparing Bitcoin to the entire cryptocurrency market cap or Bitcoin to just Ethereum. There's going to be some resemblances there. But we do see something similar in terms of the story, where we've seen quite the consolidation. We see these nice key zones that we're looking at, like on the 4-month chart, this major zone of support right here at around like 11 Ethereum for 1 BTC. That's our current level of support. We're pulling back. It does look like on the daily chart, if we take a zoom in right here, we are squeezing kind of like the Bitcoin dominance chart with an ascending wedge, and it's winding up to potentially take another shot at breaking this 11 range for the ratio for how many Ethereum it takes to buy 1 Bitcoin. So there is a slight descending zone right here. If we take a look back at the weekly and then zoom right in here, we see a nice series of lower lows connected by a trend line, and that's going to create a zone of confluence where there's going to be quite a bit of sell pressure within that zone, as well as if we just go horizontally, we can see there is a midpoint within this range as well, around the 17 zone. So overall, it does look like the continuation for the bull run is still coming. It just takes a little bit of time. We're in our first major pullback, and it's just taking a little bit longer than anticipated, but I do still think that there are signs in the market that really don't point to the market absolutely capitulating, us going into a complete bear market. That's just my personal speculation. So now we're going to zoom out of here, and we're now going to look at some charts in the global macro space. Zooming out here for a little bit. All right, and then we're going to talk about the stock market first, looking at the S&P 500. Let's zoom out a little bit, but not zooming out too much here. This major zone at around 42 is a key level of resistance, is now turning into a nice level of support. We have been seeing a lot of expansions in terms of volatility, and it kind of fizzles out, which I don't absolutely love, but the S&P recently has been creating a lot more expansionary wedges, kind of like what we see here. And then when it does break out, it does actually follow through quite well. And then the same sort of structure right here. And it does look like we're creating a third structure of an expansionary wedge for the third time here, which wouldn't be a bad thing. We do like to see risk on sentiment continue for the global markets as well as crypto. So it'd be nice to see stocks just slowly chugging along, not really seeing massive dumps to the downside, creating fear and uncertainty in the market. We'd like to see stocks just slowly chug along, nice and calmly, while Bitcoin and cryptos are really seeing a lot of the demand. That's a really good environment. But overall, right now, we're just in a nice consolidation, but it, in my opinion, it is setting up for a potential move to the upside. Now, we could see a situation where we get deeper into this area right here, but we have this splitter from this expanding wedge. This is the support right here. This is the resistance. And then we have this high, higher high, and then this little resistance turning into a potential level of support. So there is quite a bit of support right here, as well as if we're just looking at this zone right here. Nice key level of support. So I wouldn't be too surprised if the pullback does inevitably come back all the way to the high 42s or low 43s, but it doesn't really look like it's right now setting up for a massive jump to the downside. Now, if it does, like for example, create a head and shoulders where it dumps to the downside, comes here and then pulls back, like for example, if we get, let's get the brush here. This is going to be the left shoulder. You got the head right here, and if we get like a potential right shoulder, kind of like that, and it doesn't actually break, that would be a little bit worrying for the overall stock market. But if it's going to be forming this nice expansionary wedge right here, and it kind of creates a lot of volatility, and then it just continues to push to the upside, you get a nice zone of confluence somewhere around there, that wouldn't be a bad situation for us to be looking at for the cryptocurrency market. Moving on to the next chart here, let's pull this back out here a little bit and look at the S&P volatility. It is contracting slightly, where we see slightly lower lows and lower highs, as we can see right here. But unless we're actually breaking completely, like if we start to break out of this zone right here and start to really kind of like trade within this range and start to kind of come within here, that could be definitely pretty worrying, because when we see increased volatility within the S&P, it's usually going to be to the downside. So ideally, we want to see it stick below this major level of resistance at around 21. That would be ideal, because you see the descending zone continue, and then you just see it continue the overall trend, decreasing its volatility from the massive volatility event that we had back in COVID. So I would like to ideally see this continue to the downside. It does look like it. We're still forming lower highs. So it's looking like we are still contracting the volatility slowly and slowly for the S&P, which is a positive thing for the overall global sentiment. A little bit of discussion within the NASDAQ here. We did see this nice ascending wedge squeeze to the upside. We got a target at around 15.8K for the NASDAQ. Tech stocks have been doing well. If you take a really long time frame view of it, like zooming all the way out, just looks unbelievable. But we are kind of breaking out of a consolidation. This zone right here was a consolidation. We were structurally seeing pretty well respected higher lows and slightly higher highs. We were contracting. This is a wedge. If we just drew our splitter in right there, and we just broke out of it, pulling back to our minor level of support, as we can see zooming in to, let's say, like the 12-hour. Nice level of resistance turning into support, potential another level of support right here just after breaking out of this pretty well-respected wedge right here. So it does look like the NASDAQ is initially starting its initial break to the upside, and it has a lot more room to go for its first initial target. So I don't really see a whole lot of hesitation here for the NASDAQ. Now going to talk about the Dow Jones. This is a similar sort of structure that we see for the S&P 500, where we see an expansionary formation. We saw a break, retest, and then a continuation to hit its first target for the Dow Jones at 38.5K-ish. And right now we're just seeing a nice consolidation. We are at the high of it, but it's just consolidating between a key level of resistance and support. If we even go down to a smaller time frame, it's not really giving us much more than we're just forming a consolidation. You could argue that it's a little bit of an expansionary period, as we can see, but overall we are just consolidating sideways and expect this momentum to continue here. Nothing really too worrying in my view for any of the major indices here. Next, we're going to talk a little bit into the commodities here, looking at gold. Did pull back all the way back to our descending zone, but it is holding and it is recovering quite well. If we're going on to a smaller time frame here on the daily, we did break our minor level of resistance, which would be kind of around there, retested it for a new level of support, and is slowly trending to the upside. On the weekly, I would say that this major zone would be something to kind of watch out for. Around 1900 right there. I wouldn't be too surprised if we do bounce off there one more time. It does kind of look like we are forming like a slight head and shoulders. So if we go into the head and shoulders, this guy right here, kind of the left shoulder right here, and this is the head, right? And then you got your right shoulder right there. And maybe we can make it look a little bit more visible there. So that's the potential reverse head and shoulders that I currently see on gold, and it is pulling back to a major, very key level of resistance, which should be a new level of support for this reversal formation. So it does look like it is slowly coming out of its long drawn out consolidation that we've been in for a very long time. The initial breakout of this bullish push was summer of 2019, and since then it's, in my opinion, been in a bullish trend. This is just its first consolidation. Gold is taking a lot longer in terms of a consolidation, bull runs, bear markets, compared to BTC. BTC has much shorter cycles, but it's kind of in a similar situation where it's broken its previous all-time high. It's at its first major consolidation. Bitcoin is in a similar situation. It broke its previous all-time high of just under 20K, and it's in its first major consolidation. Kind of a similar situation that they're both in. Very different time frames, but kind of interesting to see. So that's my view on gold. Be great to see if it does hold that zone, because then it'd be a nice potential reversal formation. And as of right now, I don't think it's a great opportunity to be looking for longs, but for investments, accumulation zone definitely, in my view, is where we're currently in. Similar to silver, if we're looking at a silver weekly chart, we see a great ascending triangle formation with a key level of resistance at around 28.50. We see a series of higher lows squeezing the price up, contracting the volatility closer and closer towards the apex, and it does look like it is forming its fourth higher low within this ascending support zone. So we'll take a look at a smaller time frame here really quickly. It doesn't look absolutely wonderful right now. It still is holding its minor level of support there. Would be great to see it potentially create a series of higher lows, but it is just right now just creating a little bit of an expansionary period right here where it's just hammering out lows where buyers are holding this key zone. And if we're taking a look back to a previous time frame, we can see that it was a key zone of sensitivity as well. So overall, it does look like silver is just creating its higher low. Does still have a lot of time before it does actually break this key structural zone, in my opinion, but it's a good time to be looking for opportunities where we are dollar cost averaging within these higher lows, because I think still the overall trend is going to be moving to the upside. Now we're going to be looking at the FX market, primarily looking at the US dollar, and we'll touch on the basically relative strength tool that I've quickly made here on TradingView. But when we're talking about the US dollar, really, you can't really assume just because the US dollar is going down, the US dollar is weakening relative to the everyday products and services that you and I buy. Because what this chart is representing is a comparison of the US dollar to other fiat currencies that could also be depreciating compared to things like commodities or everyday goods and services that every individual really buys. So when we are looking at this, you kind of got to take it at a grain of salt, because you're not comparing the actual strength or weakness of the US dollar compared to things that we would classify as inflation hedges. It's just a relative strength indicator or tool used to measure the strength or weakness of the dollar versus other assets. And we want this to go down because right now, as the US dollar being a world reserve currency, when there is fear, uncertainty in the markets, capital flows into the US dollar. For example, take a look at COVID. During the market crash, when gold, silver, stocks, crypto, everything went down, really the only thing that did really well was the US dollar, because that is where people flee to in times of uncertainty and fear. And that is why we want this to continue to move to the downside, especially breaking this key level of around 89, because that is going to indicate that there is less certainty, less confidence in the US dollar. And that is the overall speculation that we're looking for, is we want to see the kind of entire globe shift its perspective from fiat currencies being the number one dominator of capital inflows when there is fear and uncertainty, to things like gold or ideally BTC and other cryptocurrencies is the long-term goal that we're looking for. But in the short term, we're just looking for a reduction in fear, reduction in kind of doubt in the market, and that would be a decrease in the DXY, because we don't want to see strengthened risk-off assets like the US dollar and the Japanese yen. We want to see risk-on assets do well, like the Australian dollar, Canadian dollar, New Zealand dollar, Great British Pound, currencies like that. So when we're looking at this chart, we do see a series of lower highs, which is great to see. This series of lower highs right here, we are at a key level of resistance, kind of forming a large symmetrical triangle, as we can see right here. Not ideal. I would like to see this continue to push to the downside, and then, like I said, do break that 89 zone. But there is a situation, like Brent Johnson said, kind of with the dollar milkshake theory, where there's a possibility of the US dollar gaining strength relative to other fiat currencies, as well as things like gold and BTC and other cryptocurrencies appreciating as well. So I'm a little bit more open-minded, but at this point right now, I'd like to see this consolidation break to the downside, not breaking out of this symmetrical triangle formation that we currently see for the US dollar here. So moving on to a smaller time frame, we do see kind of a similar structure to what we saw for things like Bitcoin, where we're seeing a nice wedge formation kind of like this, an ascending wedge, and that is an indication that it is a weakening market. There's two options that wedges could go to. You could melt to the upside, where we see a nice wedge right here, and then we could melt to the upside, and then we get a nice retest of this zone of confluence, and then you get another continuation or push to the upside. That's option one. Option B is if we get a wedge and then we break to the downside, and that's really exactly what we saw with BTC, with an expectation of a pullback and then a continuation or push to the downside, and that's really what we saw with BTC. So ideally we'd like to see this ascending wedge break to the downside and then hold this key level of resistance, and then just continue its consolidation, and ideally in a perfect world break below this low and then break below 89, and then we see a significant weakness in the dollar, which is then capital flowing out of the dollar going into more risk on speculative plays in the market, which in our opinion is where things are going really. So that's going to be my overall thesis on the dollar. The only real situation I can think of, unless there's like some unknown situation that comes into fruition like suddenly or randomly, obviously no one can really understand or know the future, but when we're looking at it from a logical perspective, for me at least, the only situation that would lead to a stock market major correction, Bitcoin going into a crypto winter very early, and major strength in the dollar, is if we do have central bankers and governments become a lot more hawkish in terms of their monetary policies, worrying about inflation, talking about increasing interest rates in order to reduce inflation. Discussions like that are going to lead to significant market corrections where there's more fear, more uncertainty, more doubt, and that's not going to be ideal for people who are looking for longs in the crypto market. So that's my only, at this point, the only thing that is going to be the big red alert for me to take off exposure on risk on assets. All right, so the last thing we're going to talk about is altcoins, and then this video will be complete. We're going to brush through them pretty quickly. First thing that we're going to be talking about is Sushi Swap. It is forming a nice expansionary formation right here, holding that series of lower lows, holding again also the horizontal level, so it does kind of form that potential bottoming formation with that double bottom, as well as that key level of resistance that we saw back in May and even all the way back in January. This major level around $6 for Sushi, the token for Sushi Swap, is a major zone of demand, and it does look like it's kind of breaking the lower lows with a bottoming right here, and if it's able to kind of break out of this double bottom formation, that could be a really great opportunity to look for dip buys in Sushi Swap with a little bit more conviction than buying anything within this consolidation here, because you do have that formation of the double bottom completed. So that's going to be Sushi Swap. Let's zoom out and zoom in to one more here. Not going to look at any of those. DOGE is going to be the next one. It did pump pretty high for the day, and it is forming a pretty major descending wedge formation, but the formation, in my opinion, has yet to break. This major level of support that we initially touched back in April of 2021, and then we touched it again in June 21st and again in July 16th, is around that 1650-ish. 0.165 or 0.717 or 0.17, around 17 cents, is our current level of support that we're seeing for Dogecoin. It is holding this descending zone very well. I'd be a little skeptical just entering it right when it breaks. I'd like to see a little bit of confirmation, but if Bitcoin is going to be holding a 30K zone and potentially breaking out of that descending wedge, we could see an early initiation of a second altcoin market earlier than the first time, because the first time we were in a bear market for a while, and for a multi-year bear market, so then it takes a little bit of time for people to gain the conviction in order to actually speculate in these smaller cap alts, whereas as of right now we've already kind of committed into a bull market, and I think the bull market will continue for the duration of this year. So altcoins are already prepped. People are already anticipating that second push. So when it does start to come in, it'll be quicker for capital to flow into these more speculative alts, is the thesis there. So that's going to be my view on Doge. Not really going to look at anything else there. Going to touch on Ethereum, Solana, as well as DOT. Solana, I just got another little bag there around like 2670, but Ethereum does look pretty strong. It is contracting into a descending wedge right now. And then if we're talking about the three waves, this is 1, this is 2, this is 3, then it would be great to see a nice little squeeze coming in here. And then you see a nice rally after a very drawn-up consolidation. So it does look pretty strong. If it does break around 1700, it'd be pretty worrying because this structure is very well respected. You could be melting down, possibly, but at this point right now, I do think that this is going to hold. We're going to be looking at a nice descending wedge formation, and then we're just going to be playing it out like we've been playing out wedges for a very long time, basically. We just do the same thing every single time for the structures that are presented in the market, basically. We have a series of steps that we'll follow, basically. Solana is looking a little bit better because we actually do see higher lows, unlike a lot of different altcoins. Like, for example, DOT was the chart on the top right. You see a massive descending wedge that is quite aggressive in terms of the descending, like the angle. Whereas Solana is basically a ascending support level, which is a lot stronger in terms of relative strength compared to things like DOT or Cardano didn't do that bad, but there are some tokens that have not really shown that relative strength that things like Solana really have shown. So it does look pretty strong and pretty bullish on it overall. So that is something to keep an eye on because it has shown relative strength compared to, for example, like DOT. Right here, a lot more descending. We've seen lower lows, lower highs, a lot more descending of a resistance. We can see it's just not really holding up as well as things like Solana or even Ethereum. So the thesis is it just makes sense to go with things that are holding value better, that have more demand during times of weakness and uncertainty. And the final thing that we're going to be looking at is going to be the basically relative weakness, relative strength for a basket of cryptocurrencies. And we can see there's like Binance, Cardano, Ripple, Polkadot, Uniswap, Solana, Chainlink, Matic, all these different tokens. And the reason I have this is, yes, it's great to understand which altcoin is relatively strong and weak, but I also use it for an indication for risk on, risk off, because if you see a lot of altcoins doing better than Bitcoin, it is obviously a very risk on environment and sentiment. But if you see Bitcoin doing better than a lot of the alts, it is a time of uncertainty, fear, weakness, and you're not going to have 100% of them either above or below Bitcoin. It's going to be a spread. It's a dynamic chart. So I think it's a really good tool to kind of have a better understanding of what's happening in the market. And then you can also zoom out and zoom in depending on what time frame you're looking to get the sentiment for. Like, for example, if you're looking to get the sentiment from May 19th, it makes sense that it's pretty bearish because May 19th was kind of the start of our huge correction to the downside for Bitcoin. But if you're looking at a smaller time frame, like if you're zooming in, you see things like, let's say, Aave, Binance Coin, and Comp actually do better than Bitcoin. So you are starting to see that new initiation of speculation where momentum in the altcoins that are relatively strong, like Aave is doing well. I'm kind of surprised that BNB is there, but Comp is doing well, and this is compared to Bitcoin, not compared in the US dollar, but compared to BTC. So it's a really good indication where the market is at in terms of sentiment, because usually when altcoins are doing better than Bitcoin on a certain time frame, it's a pretty positive, bullish sentiment for alts and for the overall cryptocurrency market. So hopefully that has given you a little bit of information. Obviously, when you're zooming out, doesn't look great for a small portion, but if you're zooming out to like the start of 2021, it's looking very positive for, like, for example, Cake did really well, Matic's done really well, Solana, BNB, Cardano, VeChain, Theta. These are the tokens that are relatively strong, and then you see some of them like Internet Protocol, I believe. I don't exactly know, ICP, I think it's called Internet Protocol. And then you see Stellar Lumens, Polkadot's not doing awesome. And then you can kind of take a look at the rest there. But as of right now, it does look like things are slowly coming back. We'd like to see that break in the descending zone in the overall wedge for BTC before we have any real conviction and confidence of a reversal. But things are still consolidating in our bullish structures, and there's no real major red flags for a dip and an aggressive dip below the 30K zone. We could have a slight dip below 30K zone, but if we are just still kind of bouncing, contracting the volatility within the wedge for Bitcoin, I'm not really worried. It's when if we have a massive dip below the descending series of lower lows with the support holding it, that is when we're going to get a little bit worried. So hopefully this has given you a little bit of insight to where Bitcoin and the overall cryptocurrency market is. If you do have any questions, drop a comment in the comment section below. We really do enjoy making these videos, but it is greatly appreciated, and always we're always grateful for any likes and any subscriptions, because it does kind of give us an indication that we should continue making videos like this, kind of going over not just one single price action chart or anything like that, but having a broader view of the market, looking at the more traditional markets, looking at things like Bitcoin dominance or relative strength and weakness. These are the things that kind of give you that slight edge in the market. So hopefully we are able to provide that information to you. And until next time, traders, have a good one.